How to become rich as a mining investor. This video is brought to you by Interactive Brokers, ranked best online broker by Barron's for the 5th consecutive year. But more about them later in the video. So in this video, you'll hear from some of the best investors in the mining space and how billionaires in this space became billionaires. And at the end of this video, I'll share my top tips on how you can get rich in the mining sector.
Copper demand to increase in the next 3 to 4 years.
We're facing a crisis for finding enough copper. We think we need to mine as much copper the next 25 years as has been mined in all of human history if we're to have any possibility of having the energy transition we all desire. Very important to understand that mines take 10 years or 15 years to build. It's not supply that you can turn on. So we're seeing a relatively low price of copper simply because we're breaking down the integrated world economy, and we see a situation where we really have a crisis of supply, not of demand. We're suppressing demand by raising interest rates, but long-term supply is definitely constrained.
It would seem to me that if this were as much of a problem as you want us to believe it is, we would see it reflected in the prices of copper, of cobalt, of nickel, of manganese, of lithium, and these other minerals. And the truth of the matter is that while copper has had a good run, it's on its way down, and none of those other metals, at least to the best of my ability to identify the prices, are trading anywhere near records. What's wrong?
The only thing we know for sure about metals prices is that they will fluctuate. With mining, we have to have a very long-term horizon. It takes 10 or 15 years to discover a large mine. It takes another 5 or 10 years to build it, and then they run for a century. So we just can't be disturbed by the vagaries and the fashions of trends in financial markets, and that's part of the dilemma. We need patient, long-term capital. Look at the development of the North Field here in Qatar. Amazing, and so essential to keeping Europe warm at night. It takes decades to develop this kind of fundamental, basic resource. And without it, we're really going to face an enormous challenge as a species in the next 10, 20, 30 years.
I'll go back to markets for a second. Markets, financial markets, are clearinghouses for information, and they are supposed to reflect something akin to the wisdom of the crowd. The crowd doesn't see peak copper.
All the crowd sees right now is that the Democrats and the Republicans can't agree on how much more American money to print. The markets have a very, very short-term view. In most of life, we worry about what we're going to eat for lunch or where we're going to sleep tonight or tomorrow. It's a very small fraction of humanity that has the ability to look long-term.
So we do this stock, and I think it was $1 with a 15-cent warrant. And the stock immediately went to 12 cents, which I took as a good sign. What it was investors following on to me because of my reputation. I accidentally made the stock go up. And then it began a long, slow decline. Because when uranium's out of favor, it's really out of favor.
Yeah.
People aren't just bored, they hate it.
Yeah.
And it went to 10 cents, which is what I paid for it. I've been there before. 9 cents, no problem. 8 cents, this is getting boring. 7%, 7 cents,
Yeah.
really? 6 cents, 5 cents, 4 cents. Finally, at a penny, I had to say, well,
Over what period of time did it go?
not long, year and a half. I said, well, you know what? If you're down 90%, there's no such thing as a hold. This is either a buy, you're either right to begin with, or this is a sell. You were wrong. So I went through the whole process with Borshoff again. Mercifully for me, I came away thinking, you know what? I'm right. The market's wrong. Bought a whack of stock with my clients at a penny and a half. And 4.5 years later, it was a $10 stock. Now, having a 15-cent warrant in a market that's $2 bid for millions of shares is one of the finest experiences that one can have in life.
Yeah.
Now, since you're in the investment business, you mentioned you're looking to make the most bang for your buck when you're allocating capital, and you have this thesis around gold. And then you have things like gold miners, which offer more upside potential because they're a derivative of gold. So when gold moves up, say 10%, maybe these gold miners move up, call it 30% or something, depending on how well you choose your gold miners. So how do you think about allocating to gold miners and how that might apply to our audience as individual investors?
Okay, so I think in order to understand the gold space, you need to have some also historical context on the industry too. And recently, I talked to a lot of institutional investors that asked me questions about our strategy of investing in natural resource businesses and trying to exploit those inefficiencies. And what we find is the biggest question, most popular question we get is, why do you see gold prices making new highs, but you're not seeing the miners following suit? And it's such an important question because the majority of the indices that track gold miners are indices that use the composition of those indices are really driven by larger miners, the Barricks, the Newmonts, the Kinrosses of the world. And in my view, that does not reflect the opportunity in this decade in the space. Although they might, for other reasons, do very well. And if gold prices rise, I don't think that's ultimately where the large amounts of money will be made. So if you think about the biggest reason why we're seeing this chronic underperformance across the majors, it has to do with the fact of how they're running those businesses. If you looked at just a chart of gold prices relative to revenues of those companies, you're going to find a major divergence where gold prices are rising and their revenues are not rising. Why? Well, you can't even explain that by saying operating cost is higher because we're looking at top line. We're not even declining. They're not even subtracting by operating costs whatsoever. So the main reason for that, it has to do with the fact that most of the major companies, or all of the major companies, have aging assets with deteriorating quality of those assets, and also a total lack in vision for growth. There is no production growth happening across those firms. If you look at Barrick's production for gold over the last decade, you're going to see a secular decline. If you look at Kinross, you're going to see the same. Anglo Gold, the same idea. Newmont, same gold production since we've seen 16 years ago. So why would an institution buy those assets if all they're doing is retiring those assets over time, their own projects that are producing assets? And then what they do with the capital, because of the pressure from some investors and even their own board members on cost saving, is that what they do is they take that capital, that profitability they're generating because gold prices are record levels, and then they return that capital back to shareholders at record levels, meaning they should be spending money on focusing on replenishing their existing reserves, improving the quality of those reserves, finding new discoveries, being bold at a time of a beginning of a gold cycle. Instead, they're just letting those assets run their course, and the average grades of those assets have been in also a multi-year decline. So what's the vision here? It's creating, in my opinion, one of the best opportunities for an investor to be creative, to maybe build the next Newmont, the next Barrick of this cycle. That's what I'm trying to do. So the way I think it's going to happen is you have producers, developers, and explorers. Majority of people, when they talk about miners, they're really talking about producers. If you're looking at GDX, the ETF, or the GDXJ, both ETFs are basically all producers. So you're not seeing the real opportunity here. I'm not here to claim that what we are trying to accomplish is easy. We're investing in very small cap names in the mining space. There's over 3,000 companies in this part of the industry. And what I would say is that 90 or 95% of them will fail. So the thing is, the quality companies and the bad run companies are basically being priced at the same level today. So you can find a company that trades at sub 20 million market cap that is very likely onto a major discovery of gold, and investors don't care about it. In fact, they price that along with another company that most likely won't have anything in the following years as they follow up on those projects. So what we found is that there is a plan. Oh, and by the way, majority of the billionaires in this industry throughout history have made their money on discoveries. Remember, producing, development, and also the explorers. Most of the capital made in this industry was actually made on exploration. Basically, it was a property that some of those billionaires acquired or invested in a company that owned the property, that then found a major discovery that became a company maker deposit. That's what we call when there's something that is very economically viable, scalable, high grade, and successful over time, creates such a level of profitability during that speculation period of going from a very low value of owning a property or a mineral rights over that property to then finding a major discovery. That increase of speculation, that creation of value that you build during that phase of the mining industry is what makes most of the billionaires in this industry. And when thinking about this, we thought, well, isn't this very similar to the technology space? Most of the billionaires made their money in, startup companies that then became multi-billion-dollar businesses. And, that's how they made most of their capital at that initial phase. The growth came from that startup phase part of the industry.
Interactive Brokers offers the lowest margin loan interest rates of any broker, according to stockbrokers.com 2021 online broker review, with interest rates on investment loans from 4.25% to 5.5%. I can assure you that's about half of what I get charged from another stockbroker. I use leverage to make arbitrage when selling options for passive income. But remember, leverage does increase risk and should only be used in consultation with your financial advisor. Now, back to the video. All right, so my top tips on becoming wealthy or rich in the mining sector is to watch a few videos that I've done. In fact, I'll create a new playlist for investing in mining stocks. And a recent video I did, beware of these silver stocks. I shared some very important tips on what to avoid, what to look for when investing in small cap mining stocks in particular. So a video I also did gold and silver 10 baggers, how to find gold and silver 10 baggers, and it is playing in this particular space that we're talking about. In this video I shared the different life cycle, or at what point you should be looking at investing in the mining sector if you want to find those 10 baggers. Now, I've spoken before how Jim Rogers' book Hot Commodities had a big impact on my life, and I learned so much from that book, and it's one that that is a must read for any investor that wants to invest in the mining sector or in commodities in general. The other one is Crisis Investing Gold and Silver. Those two books right there, biggest impact in my life in terms of investing in commodities. And I did this video, Crisis Investing Gold and Silver, where I just really summarized that book, took some of the greatest hits out of that book and shared them in this video. So yeah, definitely check out this video. And also I did this video, 25x returns on gold and silver stocks. I just shared my stock and why I invest in mining stocks, and in particular junior explorers, to get that leverage on the underlying metal. But it's right across the whole commodity sector. And finally, if you are interested in investing in the mining sector, whether that's gold and silver, base metals, energy, the whole commodity sector, then watch these videos. I'll create a playlist that you guys can go and check out these videos. I'll put links in the description below in this video. But this was probably the first educational video that I did on this channel, investing in gold, silver miners and explorers. And this is basically, I'll go through and how to value these explorers, how to read drill reports, the different types of drilling, etc. So check out this video, check out those other videos. If you really, really want to become a very successful mining investor, create a lot of wealth, just how the billionaires in this sector became billionaires, then you need to do your education. And I would suggest starting watching these videos. Get the books, Hot Commodities, Crisis Investing, as well as many others. And yeah, all the best to you. If you like this video, guys, do us a favor and hit that like button. Really do appreciate it. Love to see your thoughts and opinions in the comments below. Take care, everyone. I'll see you all again on another episode of Finance Uncut. And just a reminder, the information provided in this video is for education and entertainment purposes only. Nothing on this channel constitutes as financial advice. The information in this presentation is no substitute for financial advice, and all investors should seek advice from a licensed financial advisor having regard to your own objectives, financial situation, and needs.